Back in the days, you used to go to the store and then they give you like a little piece of board. Like whenever you don't have money to pay in cash or something like that, they willing and able to lend you money. So at the time when you get back in the store and you don't have money to pay, you just show off the board and then they put $11.55.
Like a credit line.
Yeah, a credit line, exactly. A month, because it was a
Right,
lot of trust.
me.
When you have a first-time home buyer, do you have any programs?
A lot of people are intimidated to talk to us for the fear, of course, being rejected or being turned down, or like Anna was saying, and we don't know what kind of questions to ask. We don't know how to start the process. So I'm here to tell you that we're here to help. Okay, it's a call. It's not a sales. I'm not trying to sell you anything. Okay.
Give me your money.
Yeah. Okay. A lot of people do not know that there's programs, low down payments for first-time home buyers. Conventional loan, you can come in as little as 3% down on your purchase price. So 3% down is pretty good. Okay. Now on that type of program, we just have to have a credit score maybe 620 or better, and you can qualify for that low down payment as long as you're a first-time home buyer. Now, let's say your score is maybe just a little bit shy of the 620. Well, we have an FHA program that still allows you to come in with low down payment, and it's very forgiving and very lenient when it comes to the credit. So we can go as low as 580. So if you're that buyer that has a score maybe about 580 and 619, you can come in with as little as 3.5% down. A lot of people think that you need 20% down.
Yeah.
Yeah. So a lot of people get discouraged.
How I'm gonna come up with $48,000?
Yeah. So a plan. We're gonna help you create a roadmap, and you're gonna do certain steps. And maybe today you didn't get the answer, but in 30 days, 60 days, or 90 days,
yeah,
we're gonna tell you yes.
It's like,
I forgot. I lost my train of thought.
that's okay. I couldn't place.
No, but sometimes bloopers are good because they can see where we're people.
So, getting back again, 620 for conventional, FHA 580.
580 or higher, we can do it.
Can we do lower with lower credit score?
So yes, so FHA allows you to still purchase a home if you have a credit score of anywhere between 500 and 579. Okay, so that's now the only thing is, because it is a lower score, we're going to require a bigger down payment. We're going to need at least 10% down payment and at least maybe 3 months reserves. And what that means is that if your payment is, let's say, $2,000, you need to have 3 payments ready in your bank. So like $6,000 ready. Investor programs, there's a lot out there. It just depends what kind of investment we're trying to do.
Okay, I have this deal, right? And it's $485.
For investment purchases, like if you want to start to build, let's say, like a real estate portfolio, income producing properties, it's a different type of loan. Okay, it's not a primary purchase. So it's not a home that you're going to live in. It's a home that you're going to lease out, rent out. So it's for commercial purpose. So any investment purchase that you're going to do is going to require at least maybe 20% down.
Okay.
So if you have at least 20% down, we have investors out there that can finance the rest as rental income properties. Now, anything that's like a single home, a duplex, maybe even a triplex, and a fourplex, okay, we can finance as a regular, traditional conventional loan. So anything higher than that, it actually becomes a commercial loan. Okay?
I see with this deal that it's a fully rent. What happened in that situation? That I get in cash flow by the house already? So that counts towards my income?
Yes. So any future rents that you're going to get from the property, we can consider 75% of that income as part of your income to help you qualify as well. So there's a couple of options that can help you battle the rates that we have today. Okay. Now, yes, there is rumors, right? The Fed has mentioned that they going to cut rates, but they're going to slowly drop. So it's not going to be like a big drop. But for now, we have programs that's basically they're called temporary buy downs. Okay. So you can temporarily buy your interest rate down. So like an example, like a 2-1 buy down. Yeah, let's say you lock in your rate at, let's say, 6.5, more or less. Just use that as an example. your seller gives you some seller concessions, and you can use those seller concessions to buy a temporary buy down. So which means on the first year of your loan, your rate's going to be 2 points or 2% lower. So you're going to start at 4.5 for the first year.
Okay.
And then at the second year, you're going to start at 5.5. And then the third year and the remaining year, you're at 6.5. So that means that you have low rates for at least the first 2 years, right? So
when you recommend that?
Whenever a seller's willing to contribute.
Okay.
Now the idea behind the temporary buy downs is when the rates do drop, right, and it decreases, you can refinance and just kind of stay at that low rate and never have your arm. So that means for the first 3 years, your rate's going to be at a certain rate. But once you get past the 3 years, whatever the rate is of that year, whatever the market is, your rate's going to adjust automatically. People that do travel for work and they're like in certain cities for certain times and they know that they're jumping, those people understand like, well, I'm only going to live here for 3-4 years.
Yeah,
so they're already going into it. I'm going to buy this out, but it's temporary. You have your down payment that's required to purchase a home, your minimum investment, okay? And then you have your closing costs. Those are two different costs, two different things, okay? So your down payment goes towards your purchase. So like if you're buying a house for $300,000, you're putting $7,000 down, that means you're financing $293, right? Because it went towards your purchase. Now your closing costs are your fees associated to prepare your loan docs and to pay for all these third-party vendors to do your appraisal, to get your title policy, to get your survey, and whatever the fees that we have that's needed to prepare your documents and stuff. Okay, that cost is just to pay for that. It doesn't go towards your house or anything like that. Now, on average, you always want to make sure you're ready with anywhere between 3% to about 3.5% of the sales price for your closing costs. So, $300,000 house, let's say, for example, you're looking at maybe anywhere between $5,000 to $7,000 in closing costs. Okay. Now, always be ready for that. It's not just a down payment. Oh,
exactly.
I got my down payment ready. I'm ready to buy. Not quite. We still need a little bit more.
Yes. And
so you got to remember, what we do is we find the investor that's going to help you finance the house. So let's say Anna is Bank of Anna, right? And she's gonna invest in your purchase. So she's gonna lend you $300,000 so you can buy that home. What she wants to see, what every bank wants to see, and every investor wants to see, is that you have the discipline and the ability to save money. So if you're saving it in your bank and you're saving it, you're showing Anna, the bank, that you have the discipline to save money.
Yeah,
so now your loan request becomes very strong. At Clear Mortgage, we don't include any prepayment penalties. So you don't have to worry about any penalties by paying it off early or maybe paying off faster. Prepayment penalties they'll charge you anywhere between 1% to 2% to 3%, of your balance, whatever the balance is, as a prepayment penalty because you're paying it off early or whatever. Yeah.